Ladies and gentlemen, happy Friday, and thank you so much for joining me again for this week's edition of Nate's Market Update. So glad to have you, and if this is your first time, I am honored that you've chosen to take a couple minutes to listen to what I have to say. Like I mentioned last week, I'm going to do my best to clarify some of the information that is out there and distill it into some usable bits for all of you. I feel like a whole bunch of attention is paid to the Dow Jones Industrial Average, which is a market to which most of us have very little exposure, versus the housing market, to which all of us have some exposure, don't we? So tune in here for your housing market news and analysis. If you have any questions, you can post them in the comments below. I just want to start out talking about historically what happens in recessions. As you can see, obviously the last recession we had was housing, was led by housing, everything was about housing. However, in previous recessions, and really most recessions are not led by housing, and housing is indeed a counter-cyclical asset class. So it does not follow what the stock market is doing or the bond market is doing. Well, it is loosely correlated with the bond market. We'll get into that later. At any rate, another reason why we should not fear a big housing recession or housing price, so maybe a little bit of softening. I don't even see that in the Phoenix market, and we'll get into a little bit of the reasons why. Some of the numbers filter in from the first half of April. So far in April, we have listed 6,103 homes in the Phoenix metro area and sold 5,527. Last year, in March, we sold 5,674 homes. So as you can see, the numbers aren't, we would expect a bigger slowdown, and I think April, as we filter and digest all of the information from April, we will start to see that. As you can see, the supply and demand index starting to tighten up a little bit, which is good. Supply is still incredibly low, historically low. It's just, there aren't enough houses for sale for the people who want them, which is why we are not seeing downward pressure on prices. So if you're expecting to see bargains, keep looking. I mean, it's possible that people will start to sell houses and we'll see an uptick in inventory, and I think we're starting to see that. As you can see, the number of listings under contract has dropped back dramatically. That makes sense, right? There's a lot of contracts that got abandoned by your friends at Opendoor and Zillow, and a lot of stuff fell out of contract, both because of the chaos that's happening in the lending market and also because there were a lot of iBuyers. They left people hanging at the closing table. Zillow, Opendoor, OfferPad, all left people hanging at the closing table when they decided to stop buying houses. Well, yeah, I hope that this clears up at least a little bit of what's happening. We have just over 13,000 active listings on the NLS, so this market is nothing if not dynamic, and it changes all the time, and I'm here every week to give you the latest. Thanks so much.